Welcome to TradeTheMBI.com. This is John. This reports for the 15th of August. We call it Ferragosto here in Italy, and pretty much everything shuts down as we celebrate the midsummer. So be fireworks, all sorts of excitement. Of course, we have that with Trump meeting Putin. Market's not really projecting much from that, other than just more of the same, which is keeping things on track. We had the MBI white spike, but it was within the magenta. So all those people who were betting on the end of the world with the CPI numbers and that were way wrong, just wrong. CPI did come in hotter than expected for some, but okay, that's some producers are going to have elevated costs related to this. But a lot of that was the early energy spike that we saw, and it's just more nonsense of the same thing. Science still under red. So yeah, we're going to keep pushing these highs. You're going to have selling in between, and we're still continuing. Nothing has changed, nothing has improved. Over time, you do see the potential for things improving because you do have investment and things coming into the U.S. And you also have a control on immigration and things. So, from an inflationary standpoint, you don't have a big bet that inflation is going to rise, especially since you don't have these consumer pressures drawing against fewer products. And that's going to make a difference, particularly in food inflation. And that's going to spread then to rental inflations and things like that. So, yeah, the dynamics are definitely shifting, and it's not a horrible thing. It's just something to be aware of. From a Treasury standpoint, Fed has been non-existent in this. I don't know that they're still going to get all that involved in anything because it's easier for them to sit on the sidelines. Powell knows he's gone, so he's just gone on vacation, and that be that, and see where it goes from there. Of course, Trump's got the new Fed governor after the other one resigned. So, will we get some potential kind of cut? Probably, but again, I think it's still going to be light and lagging. And, with oil not having changed any, it's not that big a surprise. From the Fed standpoint, they would love nothing more than to keep rates where they are, squeeze their balance sheet down to minimal as they keep, buying in new treasuries at the higher rates, and then work on adjusting rates lower after they've secured enough that will guarantee that their balance sheet gets smoothed out without having to do anything. But what we're starting to see now, and I think that you're starting to get more relevant articles about it, is the bifurcation in energy. Before, we always looked at oil and that as the broader general term of, well, this means that inflation is going to be X because of energy costs. Well, now you got a secondary problem because with this whole AI development and electricity demand, it used to be that everything was related to what the oil costs were for your transportation of things, but also electricity costs. This is not becoming the case anymore, and we're starting to see inflation in electricity simply because the demand draw of AI, data centers, that kind of situation, causing general prices to spike, irrespective of where the energy costs are. And that becomes an infrastructure issue that isn't going to get corrected anytime soon. And talk of green energy or AI is not. I mean, not AI, but like nuclear, and that isn't going to cover it. And that separation is going to be an interesting one because that could be an inflationary item that isn't accounted for and definitely will be a major block to economic growth. So we will keep an eye on that one because I think that is the growing scandal that is starting to brew itself. And I think you're going to start to see it develop asymmetrically. More to blue states that have high regulations have moved more towards attempts at green energy that just can't sustain the added demand, and who's left with even coal production versus natural gas. Either way, it doesn't matter. It's just you don't have enough gigawatt production to overcome what the demand is, and that causes prices to rise regardless of who's using it. So Euro still holding up there because, again, they believe that Trump is wrong in all categories and therefore the U.S. must be in trouble. But I think that as the numbers start coming through for Germany and that, and the constant recession that they're going to be in, and being the leader in that pack, you're going to see that the Euro growth-wise is just a disaster zone. And when that realization comes in, it's going to be a hard fall because it's no justification for where it trades at this particular stage. From a gold standpoint, of course, things have been softening because you're not seeing that jump. But again, as long as there's perpetual massive deficits, gold's not going to fall that far. It's fine to have it correct and it's stabilized pretty much in this range. It still has more room to the downside. And you can see with the NBI white spike that should continue to the zero, which would be the bottom side of the range for it within this reasonable time period. And Bitcoin and them, of course, it shot up and then faded back, and it's still within the same range. So again, fine weakness. Same excitement with ETH. You get the big jump ups and then it cools off. I mean, this is just all normal. Doesn't mean that there's just a broader excitement. It's just that there's going to be some profit taking in between, and you remix it and go again, and you can see it's pretty much straight across here the last couple of days. We're at the top side of it, though, at this particular stage. We had a little brief NBI white spike to start out. That dipped us down to the 50%, which not that big a shock. It was just a little one-off, and what it did was it filled all these positive extremes going back that cleared things nicely. So that took care of a lot of algorithms, and even if it was just a brief little dip, it still did what it needed to do. And then we ended up with the additional spikes. They were bought up, so any additional NBI white spike will be looking for a move back towards 50%, but not at this particular stage. We've gone from that cascading lower shakeout to now we've reset completely when we went negative, and it's starting to build back again. And so we'll keep an eye on that one. The same from a daily standpoint. This is what it looked like when the CPI came through, and then it was just a buy from there, and back and forth exhaustion of options trading back and forth, and that's what we're going to continue to see. Options move those intraday setups, with the broader implication being that while the overall economy is still chugging along, not much you can do but be in the market, because as far as yields go, they've been dropping. So it becomes a natural pull for money to go back into the market. That's the long and the short of it for now. Everyone will be obviously glued as to this summit meeting in Alaska. And we'll go from there. As always, trade well. Anything relevant, I'll put on our team chat. Have a good one.